The global situation is deteriorating as every year, economies worldwide allocate trillions of dollars towards services that have no tangible impact on our daily well-being or financial success. Instead, these services merely delay impending problems. How can we avert this crisis? Stick around to find out. Hello and welcome to Eminent Investments. In today's video, we'll talk about the $6.5 trillion problem that no one seems to notice. Before we get into it, be sure to hit like and subscribe to the channel. If you're done with that, then let's get started. The sole path to economic prosperity for any nation lies in investing in its infrastructure. Countries with superior infrastructure consistently enjoy greater prosperity compared to those with inadequate infrastructure. However, there is a significant trade-off associated with this, and neither economists, policymakers, nor engineers have a definitive solution to address it comprehensively. Many individuals and groups are actively working towards finding a solution to this challenge, and if they succeed, they have the potential to significantly boost the global economy's wealth in less than a decade. In the process, they could become the wealthiest individuals or groups in history. The largest and most profitable companies globally, which contribute substantially to total global output, owe their existence to investments in universally accessible goods and services. These include infrastructure like roads and ports, essential services like mail, as well as less visibly tangible factors such as education and defense. Governments worldwide have evidently recognized the importance of infrastructure development. However, it's clear that this focus on infrastructure is not always at the forefront of policymakers' discussions and decisions. Nevertheless, some entire nations have structured their economic growth strategies around extensive infrastructure projects. In the United States, the New Deal, a predominantly ambitious infrastructure-focused economic recovery plan, successfully restored the economy after the Great Depression. Presently, in response to current circumstances, the government is implementing the Build Back Better plan. It's not limited to the United States. In fact, many of the most significant economic success stories of the past century either commenced with or received substantial support from significant infrastructure projects. Typically, such endeavors are government-provided and funded through taxpayer contributions. In some less common instances, particularly in resource-rich nations, these projects may be financed using alternative state revenues, and occasionally, these services are entirely privatized. There are undoubtedly both advantages and disadvantages associated with all of these systems. However, regardless of the funding mechanism, it is typically ordinary citizens who bear the cost of these infrastructure tools. Moreover, they all share a common challenge: maintenance. While maintenance may initially appear as a mundane aspect of infrastructure, which itself may seem uninteresting within the realm of economics, it's crucial to acknowledge that it could be the most vital challenge in the field of macroeconomics. It has the potential to fundamentally elucidate both the successes and failures in economies across the globe. This perspective isn't unique. Even Adam Smith, the founder of economics as a discipline, recognized this importance. He dedicated a significant portion of his seminal work, The Wealth of Nations, to discussing the significance of infrastructure and how it contributes to building the wealth of nations. Governments often pay heed to the initial part of his advice that explains the advantages of nation building through infrastructure. However, they often overlook the warnings that, like all aspects of economics, infrastructure comes with its own opportunity costs. When managed inadequately, it can harm an economy just as readily as it can offer opportunities for growth and development. With that in mind, does investment in infrastructure dictate a time frame for a nation's economic prosperity? Is there a way to address this issue, or if not, what are the implications for global economies today? Before delving deeper, it's important to clarify that in the context of economics, infrastructure refers to anything that supports the production of goods and services. Typically, economists apply this definition to physical structures. So a bridge is considered infrastructure, whereas a sturdy financial services sector would not fall under this category. In reality, economists often employ the term infrastructure more broadly to encompass anything that can be established today to enhance future prosperity. This expanded usage includes concepts like financial infrastructure, policy infrastructure, and legal infrastructure. even though they may not strictly align with the conventional definition of physical structures. Every industry, regardless of its nature, relies on a certain level of infrastructure to remain competitive. Even service-oriented sectors such as banking heavily depend on infrastructure like internet connectivity and electronic systems. If we expand the definition further, they also benefit from broader infrastructure elements like national defense and education. In theory, companies could develop and maintain all the necessary infrastructure themselves, but this would entail a massive upfront cost. Therefore, they tend to be more competitive when they can rely on public services or privatized services for these infrastructure needs. It's a common assumption that infrastructure spending is always a sound investment because industries can either directly or indirectly generate tax revenue, which can then fund additional infrastructure projects. Infrastructure development also serves as a significant source of employment and can boost economic output on its own. Consequently, governments often turn to infrastructure spending as a dependable solution to kickstart their economy during slow periods or to create a facade of economic improvement. However, it's important to note that this strategy is effective only when there is a real demand for the infrastructure being provided. Indeed, building infrastructure like a bridge creates a ripple effect in the economy. It generates employment opportunities across various sectors, from engineers and laborers to local businesses hiring additional staff to accommodate the increased worker presence. Additionally, the construction of such infrastructure contributes to economic output and by extension increase the GDP of a country. A nation can acquire a substantial amount of debt to finance infrastructure construction. This in turn creates extensive employment opportunities and gives the impression of economic expansion. However, once the construction project concludes, the level of employment is likely to decrease, making the economic growth for that specific year appear as an anomaly. This is the case unless the economy compensates by generating additional economic activity to offset the absence of ongoing infrastructure projects. One of the contributing factors to the lack of progress in many advanced economies globally when it comes to major projects is the presence of organizations responsible for conducting feasibility studies. These studies aim to ensure that investments in infrastructure are not squandered on projects that will not yield economic benefits. Once a country reaches a certain stage of development, most projects do not significantly contribute to additional value. In wealthier and more developed nations, these projects naturally tend to be more expensive to build, further complicating the cost-benefit analysis that economists should conduct, especially when substantial amounts of money are involved. Accumulating excessive, unnecessary capital assets in a country's infrastructure represents a wasteful allocation of resources and can lead to significant debt problems, particularly if the country is borrowing to finance these projects. That's not even the sole problem. Until now, we've been operating under the assumption that all this infrastructure lasts forever, and even if it doesn't bring substantial benefits, it won't cause any harm apart from the interest on the country's debt. However, all of these structures require ongoing maintenance. Wear and tear, corrosion, damage from extreme weather, and simple obsolescence are not factored into most headline economic indicators that people closely follow, such as GDP. Nevertheless, they do subtract from the overall pool of capital every year, at a rate that can quickly amount to a significant portion of total output. For instance, corrosion, especially on steel-based infrastructure, costs the global economy approximately $3.5 trillion annually, which accounts for about 3.5% of global GDP. To put this in perspective, that's a larger sum than the GDP of all but the 5 largest economies in the world. To illustrate further, even if the entire country of India were solely dedicated to addressing the issue of rust, it still wouldn't cover all the damage it causes quietly and gradually from the moment these new projects are completed. Rust is just one aspect of infrastructure maintenance. When you consider all the resources the world allocates to maintaining what it already has, it could conservatively amount to 6 to 7% of global GDP. That's not a minor improvement by any means. If this problem were miraculously resolved tomorrow with some revolutionary new building technology, it would have a more significant impact on the world than even the internet or the steam engine. Annual growth would compound, and without consistently losing value each year, our capital stock would grow much faster than it currently does, even with dedicated and perhaps daring investments. If we had discovered a technology that eliminated this waste at the beginning of the new millennium just 23 years ago, the world would be 3 times wealthier than it is today. Of course, that's a significant if, and we live in a challenging world that takes a toll on the things we construct. So until we find a miraculous solution, the best we can do is ensure that what we build contributes to this race against gradual decay rather than accelerating it. And that's about it for today's video. If you enjoyed today's content, be sure to give it a thumbs up and subscribe to our channel for more insightful content. And don't forget to share your thoughts and experiences in the comments below. Thank you once again for watching, and we'll see you in the next video.